Hey everybody, I'm creating a YouTube video in regards to financials and also in regards to the executive summary section. Um, I noticed today is Wednesday the 25th. I noticed today that on the course page, for some reason videos are not working. My guess is that D2L is getting overwhelmed with all the colleges that are using it. They're getting overwhelmed and the videos are not working very well. So that video may come back online. If that video does come back on, I encourage you to watch that video because it's going to be more detailed than the video I'm producing now. But I'm also making an alternate video here that I can put on and post to you through YouTube. So I'm going to do this video, just give you a quick overview again as you prepare your last sections of your business plan. So as you can see again, I have on the screen here your financials. Your financials, again, are going to reflect all of the sections that you've already put together. It's going to reflect the decisions that you make. So again, for example, if you are hiring people at a certain point for positions within your business, obviously that's going to cost money. If they're a salesperson, they're also going to generate income. So what readers are going to look at in your business plan is they're going to look at those decisions that you make in other sections, and they will quickly flip back over to your financial section to see if that decision is being reflected in your financials. Your financials are basically going to be two different elements. The first is going to be a 3-year cash flow. So as you look in your books, you can look at, and it will help you as I'm scrolling through for you, helping you deal with numbers. Again, be very realistic. The book talks about making sure that your numbers are founded in reality. So, are your numbers for your financial projections realistic? That's the first thing they're really looking for. And then they're looking for, what is the cash flow month by month and year by year? So what I want you to do is create, and I'm just kind of scrolling here to see if there's any new information. It does talk about the types of financial forms, income statements and balance sheets, because for most of you it's projected because it's a future business. They're kind of useless because you're just projecting. So a cash flow is going to reflect all of those areas anyway. So we're just going to focus on a projected cash flow. For a few of you that actually do have some businesses that are up and running or have done some running, if you want to include a past income statement or balance sheet that might help your readers' understanding, feel free to go ahead and do that. But that's really up to you and that's your call. But what I'm really looking for in this section, and I want no more than this in this section, is a 3-year month-to-month cash flow followed by a break-even analysis. So as I go through again, it's going to remember that Rhonda writes this book for anyone who is starting a business, whether they have a background or not. You guys have had some background. You've had accounting 1. Some of you have had accounting 2. And also you've had funding and finance. So you've kind of worked through that. The time frames, as from looking on the screen again, the time frames that you are using are going to be 3-year time frame. So that's exactly what we're looking, and using good general financial terms are listed in your book as well. And then it talks about some things to consider when you're putting together your budget. What staff, how many, when. Remember to include benefits and taxes. That's got to be part of your consideration. And then projecting what you think your cash income is going to be. So this is a time where you've kind of decided what you're going to charge for different goods or for different services, and then how many of those that you're going to be doing each week and each month and each year in order to reach your break-even point. So the book goes on, talks about income statements. I'm going to quickly scroll through those because those are not as important. But here's a good form for projecting what you think your income is going to be. The expectation is that your cash, your income is going to. So you should be putting in, I think, a reasonable increase in your overall cash flow as you go through the years. Again, just kind of scrolling through here. So, talking about, again, what's your cash sales that you're going to be making, what other money is coming in. So when you're building up your cash flow statements, and again, I want this to be month by month by month. So January through December, and I want 3 years of those. Okay, so month by month by month. So in January, what is all the income that's coming into your business? The cash coming in, credit, any kind of income, loans that are coming in, investors that maybe are making investments for you. All of that money is accounted for at the very top of your cash flow. On the bottom part of your cash flow statement is all the money that's going out. Now we know some of the bills that we have are quarterly or annually. So you need to divide that into monthly. So if you have, for example, an insurance payment, typically insurance payments are quarterly. So obviously you want to divide that number by 3 so that you know month by month by month how much you're putting away to make those payments. Okay, so convert everything to monthly so that we can see how much is coming in and how much is going out. At the bottom of your cash flow for each month, you should have, how much money do you have left over, or are you in a deficit? And either one of those will carry then over to the next month. So if you're running a deficit, just like you do in your personal income, if you're running a deficit, that's going to carry over to the next month. So you're going to do that month by month by month cash flow. Again, fortunately for most of you, you have been an ENT 240. So because you've been an ENT 240 with Dr. Money last fall, you've created that. All I need you to do is update those numbers. Okay, so try to update those. If you want to add some kind of a narrative in there, explaining anything that might, be concerning for you, or might bring attention to the reader, you can clarify a few things. So you can include a little bit of a narrative in the financials if it just helps the reader understand a little bit better about what you're doing on cash flow. So, the book, again, it will give you cash flow projections, and here's some cash flow. On your course page, I gave you a template in which you can use to put together your cash flow statement. So feel free to use that to help you, put those numbers in if you haven't already done that. The book talks about balance sheets. Again, a total waste of time when it comes to projection, and that's not my opinion. That's the opinion of my judges, who are also my advisors. And so they say, listen, doing a projected bit, you can make, so even Steve Blank in one of his videos said, you can make an income statement or a balance sheet look good if you want to. It's kind of like a glamour shot. It doesn't really help you very much. It's really the cash flow that matters. So I always say cash flow is king. So, cash flow is going to be the most important statement that you put together on that. The next thing is the break-even analysis that you want to include. So the first thing you have to do is determine what is a unit for you. A unit could be money, so it could be $1, or a unit could be, let's say you're running a restaurant. I can make a unit into anything I want in a restaurant. It could be cash money coming in, credit, cash money coming in could be a unit. It could be number of people in a particular shift. It could be number of tables occupied during a particular shift. It could be the number of meals ordered. And quite honestly, anybody in business is going to run a break-even analysis in financials, which is really what you're probably going to be doing. Is a unit for you is going to be money. So I would focus on that. But any business will run many different cash flow analyses of many different things, so they can look at and analyze. Well, are we making enough meals? Are we selling enough meals to diners? Or are they buying enough beverages? If they do a break even and they look at how many beverage sales they have, and they see that the beverage sales are down in a restaurant, they're going to do things like have specials and specialty drinks to kind of push that so that they can increase their beverage sales. So, any kind of unit, but for this exercise, I want you to do a break-even analysis for 1 year, and it's got to be income based. Okay, so when you look on your course page, I put in there a break-even analysis tool for you to use. You need to calculate how many, how much money you need, and what are your costs, and how much do you need to reach every month in order to break even. So if you're doing a consulting, for example, I know some of you are in the consulting business. How many consulting sessions, based on how much you're charging per hour, how many consulting sessions do you need in a week that are covering your expenses for that week? It's really important to know, because if you can determine how many sales or how many sessions that you need to have, once you hit that during that week or that month, now the rest of the sessions that you have, or the rest of the sales that you have, is all extra money. That's all gravy. That's all profit money. Okay, so calculating a good break-even analysis is going to be very, very important for you as well. And really what the judges are looking at, do you have a handle on what you're charging? Is the amount of income reasonable on what you're estimating? And is it attainable? So, if you calculate that, geez, if I can do 3 consulting sessions a week, I'm going to break even. I think most anybody in any kind of a consulting business could say, geez, doing 3 a week is not that big of a deal. I can do 10 times more than that. And if so, and you can maintain that, you've got a super profitable business. And so I think that's really important to look at. So again, just to summarize again, in the financials, I want a 3-year cash flow, month by month by month. At the very top are all of the money that's coming in. And at the bottom part of that cash flow statement for each month, it'll say this is the money going out per month. Get a good grasp on that, and you have a good grasp on cash flow. And then put together a break-even analysis and any narrative that you want to include that will clarify some things on these statements would be, very helpful as well. Hopefully this is a help to you. Again, I have 2 different videos that are up. The one video might not be working because of D2L, so this one's through YouTube. So hopefully that will help you get through this particular section. Good luck with that. Again, we'll be sending those out in the very first week in April. So you need to complete your business plan in the next week and a half or so. So good luck with that, and we will talk to you guys soon. Take care.